so much once again for having me in this platform to share thoughts on this very interesting topic on halal investing. As we all know, investing is very significant in our financial independence journey, and thus it is very important to look at diverse topics on this subject of investing. And one of the topics that is of particular importance is halal investing. So when we talk about halal investing, what do we mean? There are two words here that needs to be clarified. First one is halal. Halal simply means a permissible way of doing things. And contrary to halal, it means a haram, a prohibited way of doing things. So when we talk about halal investing, that simply means a permissible way to invest your hard-earned wealth in order to generate more income for you, in order to achieve your whatever goals that you have, be income, be capital growth, be starting other business later, or for retirement, among others. And the other word is Sharia-compliant. When we say Sharia-compliant, is also another way of saying it is halal. Sharia-compliant means investment that is done in accordance with Sharia requirements. So that could be a fund like what we're going to talk about today and hear more about it, like the Halal Fund of Ndovu, which is governed by the requirements of Sharia and it is principle. And normally, a halal fund is among the funds that are characterized as socially responsible funds. Can continue, move the slide. Okay, so halal investing is a subsector in a wider topic on Islamic finance. A wider topic of Islamic finance is normally a financing mechanism that is based on Sharia rules or based on Sharia requirements. Among these requirements is to make sure that the transactions that are done are one, fair, two, they are risk-based, three, there is underlying assets, and we'll come back to these items in a minute. So halal investing is a subset of Islamic finance. When you have earned your money or your wealth, then you want to invest it according to Sharia principles, then here the issue of halal investing comes into play. And in halal investing, as well as among the principles in Islamic finance, is that in Islamic finance, it is prohibited to charge interest. So the key principle one is prohibition of interest. And the interest is simply a premium on money. Anything you gain or putting money, say in a term deposit or lending money, and get more money because of the time value, because of the passage of time, then that is, according to Islamic finance principles, it's not acceptable. So you can make a profit by investing your money, but not by lending, of which you loan out and charge a premium for someone staying and using your money. But you can invest and share the profit or losses. Another important principle is prohibition of uncertainty. That is, any financial instruments or any investments that involve excessive risk are not allowed. So, for example, betting, be sports betting or casino, whatever other platforms, this is not allowed for a Muslim to invest in these speculative businesses, as well as in derivative trading. Another important principle is the prohibition of haram industries or unlawful industries or sectors, that when you are investing to generate profit, you have to look at which sector are you putting your money in. It's like, again, if you're opening a business, a Muslim must consider what kind of a business are you opening, what kind of products and services are you going to offer. So similarly, it applies here that key in Islamic finance is to exclude any sectors that have been prohibited by the Quranic text, such as alcohol, tobacco, weapons, some entertainment sectors, and also some cosmetics, also not allowed to be a commodity trade. Another important principle in Islamic finance is the emphasis on ethical and socially responsible investing. And this goes hand to hand with the first point, that is, if you leave aside the forbidden industry, then you have to embrace halal industries. And this halal industry should be those that are dealing with products which are halal, which are beneficial to society, to the environment at large. Okay, so these are some of the principles in Islamic finance that when it comes to investors, they need also to uphold these principles. You can continue. So let's look at an example of halal investments. Well, the first one is stock, but it's not as simple as such, because again, in stocks, as we know, there are stocks of halal industries or halal companies, and there are stocks which are of a non-halal or haram industry. So it is very important when it comes to investing in stocks to be guided, to make sure that you exclude those stocks of companies which are prohibited. And they could be prohibited because either they are interest based, or they're engaging in prohibited products or service, or uh, they are operating in a speculative way, like the gambling companies, and so on and so forth. Again, gold. Gold is also another halal investment. However, there are again rules that are applicable to gold trading, among others, which needs to be well known and to be observed, because gold is treated as currency, and there are rules for exchange of currencies within Islamic finance discipline. Sukuk is also another important vehicle for investing, and these are alternative to the conventional bonds that we have, either treasury bonds or treasury bills. Now, Sukuk is a certificate that has been designed, which is not based on lending arrangement, but rather you are participating in ownership of the underlying assets, of which it will be generating income, cash flow for you. Another investment avenue or halal investment is property, real estate. And again, here we say, as a matter of principle, properties are halal. But again, if you are leasing this property to a conventional bank to generate rental income, then you can see the rental is become tainted, because the underlying business activity of leasing is to the conventional bank, which actually operates on interest. Or if you're leasing it to an insurance company, it becomes an issue again. But if you're leasing for residents or for other businesses, then that property investment becomes a halal. Then another vehicle which we know this is available on the exchanges is the exchange traded funds, which provide an opportunity to diversify your portfolio by investing in a basket of stocks that are there to Islamic finance principles. So these are some of the halal investments opportunities that can be explored. However, as I say, with a little bit care, because there is some thin line that needs to be observed, so that you don't fall into halal, into haram, or impermissible investments. So let's go back to the share, to the stock investing. Now, when it comes to stock investing, okay, there are fundamentals, components that needs to be observed. If you want to buy a stock under halal investing principles, then the first thing you need to observe or to check and find out is the underlying business activity of the company that you want to buy the stock. So the core business activity of the company should be halal. It should not be a company that deals with alcohol or gambling, or, as I said, interest based. As you know, there are a lot of banks, commercial banks, listed at Nairobi Stock Exchange and in global exchanges. So those companies needs to be avoided, because we know in the Quran, alcohol is prohibited, gambling is prohibited, interest is prohibited, pork related products are prohibited, and so on. So this is the first thing that you need to check, whether the underlying products and services of the company is halal. The second thing is financial screening. After you have ticked the business activities and satisfied that the business is halal, it is a company that deals with soft drinks or pharmaceuticals, among others, then you need to check again financial screening. And here there are a number of ratios that needs to be evaluated, which we shall see them in the next slide. The third element that you need to check, you can move the slide, is avoiding prohibited financial ratios. That is, as we shall see, there are certain financial ratios that needs to be evaluated in a company that is halal. A company could be halal, but again, when it comes to its revenue, for example, it generates some revenue from halal products and services, but sometimes it might be also investing some of its cash to generate interest. So we need to check what is the level of this interest to the total revenue of this company. And in that regard, if we find that the interest generated is so excessive beyond certain tolerable limits, then definitely, if you are to invest, then you should not invest in that, because it is beyond tolerable limits. But there are some limits. If it is within the limit, that is, we shall see there are different views among scholars on these limits. But if, say, it is less than 5%, which is the benchmark that majority of scholars are okay with, then definitely you can invest in that company. But if you have invested in that company and then it has breached this threshold, then again there could be a measure that needs to be taken. So when you are investing, you need to make sure that there are some checks on the financials of this company. And one of them, as I mentioned, is the source of revenue of the company. Are there any income coming from impermissible activities? Because as we know, sometimes companies might not be 100% generating their income from halal sources. So we need to check and see what is the percentage of non-halal income to the total revenue before investing, and also be checking that ratio while we are investing, in order to make sure we take preventive measures so that we don't end up earning income which is not halal. Another important component in stock investing is a screening board. That is the Sharia board that is guiding, as we said. For example, there are ratios. Okay, there are certain thresholds that needs to be observed, and who sets these ratios? Okay, and this is a panel of Islamic scholars who are experts in investments in a stock in other financial products, who are normally advising what is the tolerable limits and what is not, and if the stock has breached the tolerable limit, what should you do? Should you sell the stock? Should you give to charity a dividend? Should you give a charity the capital gain or not? So normally, screening board, a Sharia board with scholars will be able to advise given the circumstances at hand. So it's very important when you're investing in a stock to invest in a platform or with the guidance of Sharia scholars that can be able to assist you around these issues. And the fifth one is the purification or cleansing of stock. As I said in number 3, it is very likely that you might have invested in a company that generates, say, 2% of its revenue from, say, interest. So what do? Does it make the 2% halal for you? Definitely no. You need to purify this 2%. You purify on what? Do you purify on the capital gain, or do you purify on the dividend? Where do you purify this now? This is where the Sharia scholar's role comes into play to guide you to say, okay, there is a 2% here of the revenue of this company that is not Sharia compliant. And for example, if the company paid you a dividend, then you should purify, say, the 2% from the dividend you receive or some other advice that they might issue. So we don't normally say that if a company is giving or generating 2% on interest, and that is within the threshold, we don't say that is okay for you to make or generate income and not to purify anything. No, we're simply saying it is tolerable for you to invest, but whenever you make money out of that investment, you have to purify a portion of it. So that is very important aspect when it comes to purification that needs to be well understood. These are examples of companies that are eliminated due to their business sector screening. So those companies which are in excessive debt, the companies that are dealing with alcohol, firearms, impure food, usurious institution like commercial banks that deals with interest, also certain entertainment industries, gambling and tobacco industries. These are normally no-go zones. When it comes to ratio, as you can see here, this is what I was talking about. There are tolerable limits on the financial screening. So we need to check, for example, the total debt of that particular company over the total assets of the company. And the Sharia scholars here have set a limit to say, for you to invest in a company that deals with, say, halal drinks, okay, which is according to the sector requirement appears to be okay, but now you need to look also the financials. One of them is the total debt over the total asset, and in this aspect it should not be more than 33.3%. Cash and interest bearing securities, again, over the total asset should not be more than 33%. Account receivables and cash should not be less than 50% of the total assets. Total interest and non-compliant activities income should not exceed the 5% of total revenue. This is something that I have been alluding to. Now, these are the ratios that have been deliberated by Muslim scholars. You might not find a Quranic text that is directly putting this ratio, neither will you find Prophet Muhammad specific hadith on these ratios, but our dear scholars through ijtihad were able to come up with these ratios. And these ratios differ from one institutions to another because scholars have diverse opinions on this particular ratio. So for example, Ayofi Sharia scholars, they have their ratios, as you can see. And if you look at FTSE, also they have their own ratios. And if you look at Malaysia Security Exchange, they have their also thresholds. And if you look at S&P 500s, they also have their own ratio. They are looking on all these aspects, but they differ on the percentages of tolerable limits. Okay, and they have also some consensus on some of these limits. For example, on the impermissible income, they almost all agree that you cannot invest in a company that generates more than 5% of which is revenue from non-halal sources. So you should bear in mind about these diverse opinions. And in the case of Ndovu, they adopt the views of FTSE, FTSE as the benchmark for this financial screening. You can proceed. So benefits of halal investing. The first one is social ethical investing. Okay, bearing in mind that there are alcoholic, tobacco, and other sectors which are eliminated due to being socially harmful, then you are in the right place by investing in a halal manner, because you are actually promoting companies that are producing goods and services which are good to the society and to the people and to the environment. Another benefit is no exposure to speculative risk. You know, in halal investing, we don't invest in gambling and casino businesses. So this kind of exposure on this kind of highly speculative businesses, that risk you will not have it. So you will totally have eliminated the exposure in your investment on this particular issue. You will have no speculative risk on your investment portfolio. And another reason as to why you have to invest in a halal way is to grow your income, to grow your capital in an ethical way. If you invest in a stock, there are two ways that the stock can bring money for you: capital appreciation or the dividends. And if it is based on the principles we have talked about, then you will be generating halal income to meet your goals or to meet your diverse range of objectives that you might be having. So these are the benefits of investing in a halal manner. And halal fund of Ndovu is certified by the Sharia Review Bureau. This is a Sharia scholar, is a body of Sharia scholars that provide Sharia pronouncement with regards to varieties of financial products. And since through Ndovu you are investing in an EFT, which has been designed by another company called Wahed. That particular company's, the structure of these ETFs and the Sharia requirements to operate the ETF have been checked and certified by Sharia Review Bureau. And whoever is interested to verify this can always check with Sharia Review Bureau's website, and they can trace the certificate of halal pronouncement, and they will find it there. Just myself, I did that, and I keep doing that to make sure that the ETF that I'm investing through Ndovu remains a Sharia compliant. So I think I'll stop here on my side, and let my colleagues or the Ndovu team to proceed from there. Thank you so much for having me and for listening.